So you want to be confident in knowing what's happening in the housing market? Well, today I'm bringing you the top 3 topics the experts are discussing, which is what is happening with home prices, where are mortgage rates going, and most importantly, everyone's talking about affordability. So let's get right in to this month's edition of Keeping Current Matters and September's National Housing Market Update. Thanks for sticking around. And as we discussed, the 3 main points that everyone wants to know, which is what is going to happen with mortgage rates, where are home prices going, and overall there's a lot of talk about affordability. And let's dive right into what this year has really been based off of, which is mortgage interest rates and the volatility of what has been happening with them since January of this year. And as you can see, starting all the way back at 3.2% on a 30-year fixed, going to now the most recent data is September 1st, which was 5.6. You can see we saw a steady incline regularly every single month from the beginning of the year all the way upwards to, if you remember, in June, we started seeing some softening in July and August, and now interest rates are fluctuating and going back up a little bit. And well, why is that? Is because, as we know, and you've probably heard us share before, is inflation is the greatest enemy to mortgage interest rates. And as we look at what can we predict, is that we can look to the top experts to share with us, since there's been so much volatility in them going up and down, what are you seeing is going to happen as we enter the remainder of the year, going into next year as well. And as you can see here, listening to the top experts predicting what's going to happen in mortgage interest rates, they're going to start seeing, like we've been suggesting, a stabilization of interest rates. And as you look at the average of all 4 from Freddie Mac to Fannie Mae, MBA, and NAR, as you can see, we're going to be hovering around that low to mid 5%, and then if possible towards the end of next year, breaking into that sub 5% and upper 4s, which is most likely where we'll remain to stay for a long period of time. So as you look at a lot of the changes of what people have seen happen, is this is now a great time to predict and know that the experts are sharing that we are going to see most likely a stabilization of interest rates. So now you can start better understanding what is your new affordability level before we dive into home prices, which are going to continue to go up due to the pressure based off of inventory. But as you can see, if the experts are correct, the stabilization with mortgage interest rates, and we'll keep you updated every single month as always based off of what we see in economic conditions and the impact that mortgage rates have on them. However, housing economist that Keeping Current Matters likes to follow a lot, after the end of summer lull and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. Now, this is an interesting topic because for many people across the nation, as we saw not only the change in interest rates since the beginning of the year, but we started to also see inventory rise dramatically. We are finally now starting to see inventory peak, start to decline again, like we've been predicting. And what that's leading to now is the stabilization of the rates, as well as an adjustment to what is going to happen with home price appreciation. And this is a big topic on a lot of home buyers' mind, as well as that of homeowners, which is what is going to happen with the value of prices. As you can see here from Mark Zandi, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. What does he mean by this is as we start to see certain pockets month over month versus year over year, and when we get into actually showing in the future slide here what's going to happen with overall appreciation, you have to remember that some pockets of the West saw extreme pricing appreciation, that if a seller was selling over the last couple months and back in January, February, that home would have sold for $400,000 and they had a list and accept a contract price around $370,000, you were going to see some pockets have month over month home values drop. But just as we shared and we're seeing now, both in our local market here in Colorado, that has happened in some markets, but now they are rebounding with lower inventory and the prices are back to a pressured upward pricing appreciation or home value appreciation. What do I mean by that? Well, as you can see here, when we talked about the way you evaluate appreciation in market is month over month and year over year. And so as you can see here, with appreciation slowing, not depreciating, January, February, March, April, May, we saw historic highs in appreciation of home values. And remember, depreciation is when we start to see 0% increase in homes year over year to now a negative and or a drop in prices. But as you can see in July, we were still seeing year over year 15.8%, and this number coming from that of CoreLogic, who usually has the reporting on the lower end of the side of value. So now as you also look at CoreLogic stated that annual home price growth slowed for the third consecutive month in July, but remained elevated at 15.8%. As 30-year fixed rate mortgages neared 6% this summer, some prospective home buyers pulled back, helping ease overheated and unsustainable price growth. Looking ahead, CoreLogic expects to see a more balanced housing market with year-over-year appreciation slowing to 4% by July of 2023. So what are they saying in this slide is as you looked at overall, these numbers usually hovered around 3 to 4% on an annual basis. There are different markets like ours locally here in Colorado that over the last 30 years, that number was 6 to 7% appreciation. So we're going to start to see this month over month deceleration of home price appreciation, but we are still going to see for a very long period of time. As you can see, July of this time next year, we're still going to have the month over month changes that are going to allow appreciation to occur year over year. Now remember, this is a nationwide slide, not that of a local slide, so every local market is impacted a little differently. Now, as we look at this slide from many experts raise home price forecast, you have to remember what's interesting is home price predictions start at the beginning of the year on what they believe is going to happen on a year over year or annual basis. Throughout the year, especially mid-year, a lot of the main economists change their predictions of price forecasts. And as you can see from Fannie Mae to Freddie Mac to NAR to Zelman Associates, MBA, and the Home Price Expectation Survey, in January, we were expecting to see a lot slower level of appreciation forecast. What we're seeing now is due to the fact that there's still an extreme demand for housing in general, and that of the challenge, or let's just call it pressure of organizations to help compensate employees for that of inflation and overall living costs, is the latest appreciation forecast, as you can see, with all of them, is 11.3%. So if you take the high from Fannie Mae of 16% to 9.3, 11.3% annual appreciation is still a very large amount of appreciation or increase of home values as you look at where they currently are. As we also look at why is this going to happen, is we have to understand inventory is still historically low. And as you're looking at more of the local market updates and the national housing market updates, we'll time out for a second. We just got reports that we'll probably have less than 500,000 homes on the market in January this time next year, which will actually be the lowest level of available homes ever outside of what happened this January. And we know nobody wants to repeat the crazy market that we saw this January, February, March. But what we do want to do is make sure that we are finding a certain balance around how much inventory is available. And unfortunately, until more people transact, decide to sell, decide to purchase, is what ends up happening is that we don't have enough inventory on the market. And as you can see, the same week now, September 2nd, right, in 2021, we are up 26%. So we have a lot more inventory on the market currently, which was brought to the market in May, June, and July. And a lot of those homes have stayed on the market longer, which has increased that inventory across the nation. Now, again, as you look at the same week in 2020, though, and the same week in 2019, we're at 42% less inventory. Reality is, we've had a lot more people be born. We've had a lot more millennials entering the main power of purchase, meaning their levels of income to start purchasing properties. And we know that we're not seeing a lot of the boomers exit their properties. They're holding on to them for a longer period of time. And so again, the inventory is not available, which creates the pressure of upward rising prices for homes. So again, this leading indicator of inventory being extremely low, especially what we're predicting to see in January, allows for several months, and what you saw in that original slide of why the experts are predicting we could have a very strong fall housing market. So let's dive into the last piece on today's National Housing Market Update, which is a topic that many people are addressing, and it's affordability. Now, affordability at historically low levels since this index has come out back in 1990, you can see what this is the average person's ability to afford the average home price, meaning that 100% of people can afford 100% of the average homes on the market. As you can see now, we're down to 98.5 in 2022 compared to 2021. That index was almost 160. This is the challenge, though. As you start looking at how affordable homes were in 2016, 17, 18, 19, 20, is a lot of people back then still felt homes were not very affordable. What it really comes down to is better understanding what your own affordability is, as well as what is the affordability levels of millennials and the generations coming to what they have available for a percentage of their income going to real estate, or let's just call it their mortgage. I'll dive into that slide here in a second. However, as you can see, 100% factual, affordability is a challenge right now for many people, but let's make sure that we look at it from a perspective of what affordability is. But we can all agree that since 1990 right now, we are at a low on the affordability index, meaning you are correct. It's going to cost a lot more of our average income to cover that of your monthly mortgage payment. But we also know that interest rates have been extremely low, which is why people say date the rate, marry the home, and over a period of time, we should start to see some benefits of that affordability going back up as rates come down. However, the challenge is if home values keep going up, that number starts to neutralize or stabilize, and now you have somewhat of a new norm around the affordability of homes, which, as you can see here, compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265. That's an increase of 53% for that of your mortgage payment. So what that leads us to believe is, as you can see, the monthly mortgage payments increasing going all the way back to April 2020 in this slide. And as you can see, that red bar graph going all the way up to 1944 in June, compared to May, compared to April, compared to March, February. But you can see that even during the crazy time last year where people were bidding and purchasing properties, is the overall payment and or affordability was much greater than it is now. So the important part is making sure that you're having strategy sessions with your real estate agents and you're better understanding what's happening in your local markets and the impacts of what you do if you wait or you stay and where that will be in the future, because every single month we're starting to see more of a normalized trend, but we're also seeing that trend lead back to lower inventory and home prices accelerating. And unfortunately, we don't see a dramatic change in the interest rates while we're trying to get the economic conditions and inflation under control. So let's dive and the mortgage payment to income ratio. This is to kind of close the subject really around, are they unaffordable, or is affordability at its lowest when it comes to purchasing properties? And that may continue to remain for a long period of time. As we know, there's been a lot of people investing in real estate, specifically single family, because many experts knew that this was most likely what was going to happen because they follow the data versus the emotions or the opinions of other people sharing their frustrations around their individual situation. So as you look at the mortgage payment to income ratio, 2000 to 2021, you can see back in 2006, this affordability was 24% of that of the median priced home with a median income, principal and interest payment to income. And as you can see, that number dropped dramatically as we started going through coming out of the housing crisis, as well as leading into where low interest rates of 2018 through 2021. But today, as you can see, it's requiring 25% of that income ratio, which still makes it similar to purchasing homes in July of 2006. It just requires a more income to go towards your mortgage or owning real estate and making sacrifices in other areas, or making sure that as you look at your income, that it's increasing to make sure that it's relative to your ability to afford home ownership. So as we close, you can see the median household income versus qualifying income is also different across the nation. When you really look at the US, meaning the median income versus what it takes to qualify for a home, you can see is extremely impacted in the West. And that's why most of these Western states are being impacted more over the last couple months with having to adjust that month-over-month price adjustment and values. But as we get back into, for all you homeowners out there, fourth quarter of this year and beginning of next year, as these inventories start to drop again, and we go through those month-over-month changes that we had to see a level of home prices drop compared to where they were. Remember, what the market gives, it takes back a little bit. And we received a lot in the Western states in overall home price appreciation. But remember, even in the Western states, we're expecting year-over-year appreciation. And the normalization of all this makes it very advantageous for those that need to sell who want to buy, as well as those who are entering the market to buy for the first time. We just may have to make some adjustments around where our income is going and allocate more of it to that of home ownership, which a lot of people were predicting was going to happen over the last decade. So 3 things as we close out today that buyers can do if they are struggling with affordability. See, the fact is, home ownership is less affordable now than where it's been ever since 1990. But the challenge is the best time to have bought a home has always been yesterday. So as we look at predictions in the future, it's probably the same now, that the best time to buy a home or make a change is today, because it's not going to be any more affordable tomorrow. The benefit of affordability is as you own this home for a longer period of time is when rates take the steps back down and get lower, you have the ability to take advantage of a refinance since you own your property. But the 3 things that you can do if you are struggling with affordability, obviously talk to your real estate expert. Have a 15-minute strategy session. If you haven't talked about your thoughts, learned about this information, reach out to me, schedule a consult, and I'll connect you with the best agents all across the nation. But let's expand your search area and criteria. Some people are going to move out of pockets of where they're looking today to own the home today that they can afford to be where they want to be tomorrow, utilizing that of equity in their home that they own. Exploring alternative financing options. There are a lot of programs out there that can lower your payment for a period of time, making affordability easier today. You just have to make sure that you're very confident that that worst case scenario is affording the payment of what it should be today long term. And again, for most of us, we need to live somewhere in the middle, which is not best case scenario and not worst, and that's a great investment to make. So there are financing options out there that can help you be in that middle case scenario. And then obviously, for many different situations, programs, there's grants, there's gift funds, many things that you can receive to help you lessen the challenge of affordability so that way you can move into home ownership. This is speaking to a lot of people who are not in the housing market, because those who own right now, the good news is that home price is going to continue to go up and appreciate. What we have to figure out is when is the right time for you to make that change, whether you're downsizing, investing, or finding a replacement property. And so as always, I appreciate your time. We'll leave you with Allie's comments here, which are, we are in a place where strategy, discussions, and planning are critically important to make sure we can thrive during these challenging times. Stay nimble, stay informed, and remember, housing is traditionally one of the first sectors to slow as the economy shifts, but it's also one of the first to rebound. And that's exactly what's happening right now. We've seen a little bit of a slowdown in housing. It's going to rebound first while we go through other impacts and changes as an economy. But always remember, staying informed, spending 15 to 30 minutes with your local market experts to learn this information. How does this national housing update impact you when it compares to your local markets? Because we know, as you saw on that other slide, West is different than East. But overall, as a nation, housing is looking very promising for those who own. And unfortunately, rents are going to keep going up. Home prices keep going up. Nice part is, as rates stabilize, it leads to a lot of confidence for those that don't own a home right now to reach out and start figuring out the steps they can take and the strategies, not hope, the strategies to become a homeowner. So from me to you, thank you for your time. As always, I look forward to keeping you informed, keeping you current on what's happening in the market and what the top experts and economists are predicting is going to happen in real estate.